welcome to the JordanSellsCincy episode. This is number one. Today, we're going to be talking about what's going on in the financing world. Right now, it's December 2022, heading towards to the future market here. And a lot of questions I get right now is what's going on with interest rates? Should I be buying a home? And today, we're going to have a great guest, TR Wise from First National Bank. TR, welcome.
Thank you. Appreciate it, Jordan.
Yeah, absolutely. Absolutely. So TR, just so people kind of get a better idea about you, how long have you been in the financing / lending world?
Yeah, I've been in the finance world pretty much my whole career. On the residential lending side, I've been in the business over 20 years. I always tell people that I got into the business when I was 10 years old.
10 years old, why is that?
Just because, my age and everything like that is just as a joke.
Sure, got it. So what got you into this the financing lending world?
I was doing commercial loans prior to residential, and I just love the residential financing because it's a little bit more fast paced and get to talk to people one-on-one more often, and it's just a quicker sales process.
Got it. And so you've been over for 20 years, correct?
Yeah, absolutely. It's been a fun journey. I've seen the ups and downs of the marketplace, and it's just been a crazy but fun ride.
Yeah, and so with that in mind, from now, so 2022, 2002, you've been in multiple markets, multiple different times where in real estate itself, it was a lot harder to buy or sell. What has kind of been one of the crazier deals that you've had in the past?
It always turns crazy when somebody during the loan process or during the time that they're buying, they change jobs or quit their job or go out and buy a boat or motorcycle. It always changes things, and we have to do different things to try to still keep everything alive and keep everything together. So just a note, just don't do that whenever you're purchasing a home. Don't go out and run up your credit cards or anything like that during the time or process or buy anything.
Right. And so just in case if no one has ever either heard a story like this, in regards to buying a big purchase, why should they not do that when they're buying a home?
Well, it causes critical problems loan wise as far as getting them approved. If they go out and buy something during the time, we have to use that debt against their debts, and it could put their debt to income over, and it could disqualify them for a loan. So it's very important not to do anything like that. Of course, quitting your job in the middle of it, going to a temporary job during that time period, that could also disqualify someone during the process of buying a home.
Right. Because during that time when you're looking to buy a home, you give what's called the pre-approval letter that shows you are pre-approved to this number. And then if you buy a purchase that could be up to hundreds of dollars, that wasn't calculated in this pre-approval, it changes the numbers, correct?
Changes everything, and it can drive their debt to income up and cause them to lose the qualification on buying the home, and just don't want that to happen. So I try to guide everybody once we start the process not to do anything as far as buying anything new, driving up their credit card debt, anything like that. During the Christmas holidays, don't go out there and spend lots of money on Christmas presents,
Right?
Because that's going to drive your balances up, and it could cause your scores to drop too whenever your balances are higher on the line of credit you have.
Right. I think I think I've told you this story before in the past. When I've had buying a property in the past, my first deal, one of my crazier deals, I had someone who was buying a new property but selling their old. And unfortunately, one of the big things that happened for us is that they had chickens on our current property. So, and the new property had farm, all this great land. Well, for them, they actually had a little kennel that was inside of their home. So I had to write down in the contract, because we were under contract of selling their old one. They had to basically put down in an addendum form saying the chickens will be on the seller's on the new property from X days to X days. When the buying of their property, those homeowners, they will go on vacation. My buyers will be taking care of them for X days to X days. So it was so crazy.
That is crazy.
I got called chicken boy for 2 weeks at my office. So it was hilarious. But kind of transitioning here, moving forward to the kind of current market. TR, I don't know about you, but right now the top three questions I get right now is what's going on with interest rates? What is going on with real estate right now? And what are we getting for lunch today? Those are the top number three questions. I don't know about, I know one and two a little bit better, three, I don't know, but kind of talk about what's going on with interest rates as of right now.
Yeah, absolutely. So, like I said, I've been in the business over 20 years. Back in 2008, we had a different market. The market declined. That was a totally different area as far as what was happening back then as compared to now. The market is different now than it was back then. So one thing that people are very concerned about is inflation and the current state of the economy. Am I going to have a job? All of those are concerns, and those are totally understandable concerns. But what I'm realizing is that, when I came into Cincinnati 20 something years ago, I bought a house and my interest rate was at 9%. And, people are so used to the rates being at 2 and 3%. And that was historically low rates, but now they're just back up to normal rates in the 6% range, which is a fantastic time to buy. I mean, those are incredible rates. What's happening in the economy is they're thinking that, and then whenever the reports come out for the next 2 months for November and December, we're going to get some pretty good reports. It's going to start, I think that it's going to start on the upswing of things rather than on the downswing of things. So it's going to show probably that the inflation and everything like that, the economy's bottoming out and there's going to be an upswing in the economy. And what that means for mortgage rates that, they're predicting in the next 2 years, we're going to have a presidential election that certainly the rates are going to change and probably going to decrease some. Are they going to get to 2 and 3% again? Probably not. So having those expectations and hopes of that in order to buy a home, you just might as well forget that and just realize that the rates are really at great low rates right now, and it's a great time to purchase a home.
Right, right. And I think, that's kind of what I'm seeing too, like when talking with you, as well as other people like in the business of seeing what rates are looking like right now. In regards to like on the real estate side of things, it's also a great time to buy because, compare the past couple of years, we've been paying over list price. Some buyers have been waiving inspections. Yes. That's one that's never good, because then some buyers are then finding out, hey, there's a lot of problems with this home that I didn't realize about because I didn't inspect it. There's other things too, as we talk about getting an appraisal. One is getting an appraisal gap where, let's say, for instance, you're buying a home, you're saying you're going to buy it for 100,000. Well, then the appraisal comes back short 5,000. It's only $95,000. Well, you have to renegotiate that price with either the homeowner to see who pays that difference, or it's going to be you who pays the full difference. So right now we're not seeing that price reductions are happening. Homes are on the market longer, so it's still a great time to buy, even though interest rates are up. There's still a great time to buy. It's not compared to like what we talked about in the past, where it's like up to that double-digit interest rates back in 2010s.
Absolutely. And you're actually hearing from real estate agents like yourself. Agents are starting to have open houses, and so what that means is that the homes are out on the market a little bit longer time. You're not having to pay $100,000 over list price. You're able to negotiate the price better. And typically right now they're saying that the homes are out on the market at least 3 months now. That's a far cry from what it was 6 months ago, a year ago. So that's that tells us that there's a changing market, and it's a great time to buy right now because you're able to negotiate, because those homes are out there on the market longer. Typically, it's right now it's a seller's market. Whenever the homes are out there for at least 8 months, it becomes the difference between a buyer's and a seller's market. So we're not quite there yet, but it's headed that way. So that's a great sign and a great time to buy right now.
Yeah, yeah. And another question I'm gonna get, and that it's gonna be, well, I'm still not comfortable paying that high interest rate. I'm not really there. What ways could a buyer do to lower interest rate if that's a big deal for them?
Yeah, if that's really a big deal, there's some ways that you can lower that interest rate. One way, instead of doing a 30-year fixed, doing a 5-year arm. What a 5-year arm is the loan is fixed at a lower rate than typically the 30-year rate is at. It's fixed for 5 years, and they can always refinance it during that time. And even after the time of the 5 years, the fixed rate starts to adjust, they can certainly refinance it at any time. And typically, in well, record wise, people do something with their loan within 5 to 7 years anyway. So they're not going to keep that 30-year rate. So go out and find the house that you love, fall in the house that you love, and you're not marrying the rate, you're marrying the home that you're going to buy.
Right.
And you can always refinance that loan out there whenever rates do change. There again, it's not going to go down to 2 or 3% again, but it could go back into the fives, and that would be a great time to do something and refinance their mortgage. So that's a great way of doing something different.
Right. Right. So that kind of goes over what now the current market. So heading towards the future of 2023, that's when coming up the spring, summertime, that's when a lot of people are getting new jobs. Kids are finally out of school, so they can kind of more do the home, looking for a new home. What is we kind of talked a little bit about it, but like, what are you thinking that interest rates are heading towards in 2023?
Yeah, there again, I've listened to a lot of economists and people in the mortgage business, and they're typically saying that we're going to have some reduction in rates. It's probably going to towards the first of the year, it's going to kind of flatten out around 6%, which is right there right now. It's going to stay there, but there again, in the next 2 years, you're going to have that presidential election, and of course, the government's always going to want the economy to look good, and they typically want to lower the rate a little bit, just like they do gas prices when an election comes up. They want to make sure everything's in place, everything looks good, so that political party can come back into the presidency again.
Right, right. And so that makes sense. So like interest rates could be lowered down, but of course, if your credit score is not in the best situation, your debt to income ratio is not the best situation. What are ways for, if a buyer is looking to buy in 2023, what should they do to better save themselves when the time does come to buy a new property?
Yeah, that's a great question, and I always get that as a lender. They want to wait until they fix their credit. They want to wait till this, wait till that. Don't
Right,
wait. Go ahead, get with a lender. Let them assess where you're at to be able to buy a home. If you do need to get some things worked out on your credit, me personally, as a loan officer, that's one of the services I provide to help people to get into position. If their credit scores are not good now, I get their credit scores, help to get their credit scores increased so that we can make a plan towards that buying of a home and get them into position, and not to wait. Because we all both know that if you wait, you're going to lose opportunities on really great houses out there
right,
that's going to fit you and your family's needs.
right, right. And that's 100%. I mean, I've had buyers that we've already worked together with that are right now planning for 2023, getting with you, trying to boost their credit score up, knowing exactly what's the if they are going to get some sort of income increase, what does that kind of number look like? So like better gets
Yes.
your numbers better. So when the time comes, when they're ready to get pre-approval, they're already ready to go, locked and loaded, and
Yes.
just find that whenever that property does come up that they really want, they don't have to wait. It's just they already have the paperwork, and we can kind of already write that offer in. So
That's correct. And many people don't even know where their credit is really. They're just guessing. So why not go ahead and let's take a look at it. And you may be already in the position to buy. Other things to do when you're preparing to buy is to save money, have some reserves, because whenever you buy a home, things could go wrong in the future, furnace or anything like that could go wrong, and you need to have some reserves to be able to to do those little things that needed repairing or anything like that. And always teach that you pay down your credit cards, because that is critical in your credit scores. You don't want to have $1,000 balance on your line of credit on your credit card and have your balance all the way up to that $1,000 mark. That's going to decrease your credit scores. So start paying down your credit cards. Don't go out and buy a bunch of Christmas gifts on credit, because that's the number one thing that I see every day that hurts people in getting their purchasing a home.
Right. Right. And that totally makes sense. So Tiara, again, we kind of already talked about the current market and if you heading towards the future. Is there anything else that we haven't covered that you'd want to just touch base on in regards what we've kind of gone over so far today?
No, not at all. There again, it's a great time to buy. The way the housing market is right now, the economy's on the upswing. Spring market's going to hit, and it's just going to be great opportunities to buy homes out there. There's going to be I think, a lot of inventory going up out in the marketplace, so that we can all get our clients into a home for the new year.
That's all right. That's all right. That's awesome. TR, what's the best way for anyone, if anyone wants to learn more about kind of what you do as a service at First National, or just get to know you a little bit better before making any business, what's the best way to reach out to you?
Yeah, absolutely. Best way is just to call me. My number is 513-238-0999. Real easy number to remember.
There you
That's
go.
513-238-0999.
Awesome. Yeah, we'll put that down in the description too, just for anybody else if they need to read it out or if they miss it there. So thank you again for watching.
Yeah, absolutely.
We'll be having a future episode for first-time home buyers. So if that's something that you're interested in, or anyone who hasn't bought a home in a long time, we'll be kind of going over more tips and tricks for you when the time does come for this new year. So thank you guys. Have a good rest of your day.
All right.
TR.
Thanks so much.